Hello and welcome to the Weekly Outlook at XM.com. I'm Maria Bashir and joining me is lead investment analyst Rafi Boyadjian. We'll be reviewing the week ahead, which will be a busy one, with 3 central bank meetings ahead of the long Easter weekend. So Rafi, let's begin with the Reserve Bank of New Zealand, which has its meeting on Wednesday. The RBNZ has lifted interest rates 3 times already, so do you think we'll see a bigger increase in April? What will a hawkish stance mean for the kiwi?
Well, Maria, it is possible we might get a 50 basis points rate hike this time around because inflation in New Zealand has already risen to 5.9%. It's probably going to accelerate further in the coming months. And despite an expected slowdown in the first quarter in New Zealand, growth should bounce back in the second quarter as most restrictions will soon be lifted there. Also, there's likely to be a limited impact on the New Zealand economy from the Ukraine war. In fact, the economy could get a boost from higher commodity prices. But on the other hand, the fact that the RBNZ has already lifted rates 3 times, there isn't an urgency perhaps to raise rates by 50 basis points because they're not as behind the inflation curve as other central banks. So this poses a downside risk for the kiwi if the RBNZ doesn't deliver on a double rate hike on Wednesday. And even if they were to raise rates by 50 basis points, the kiwi might not necessarily get much of a boost because markets have already priced in a very aggressive rate hike path for the RBNZ.
Over in Canada, there's a similar economic situation with inflation at a more than 30-year high. What are Bank of Canada policymakers likely to do on Wednesday, and how will it impact the loonie?
So the Canadian economy has bounced back really strongly from the Omicron wave, and inflation has risen to multi-decade high of 5.7%, and this will probably rise even further in the coming months. Not only that, the Canadian economy is being boosted by higher oil prices, and it doesn't have much exposure to the Russian sanctions. So the outlook is a lot stronger than for other economies like say the euro area. That's why investors think the Bank of Canada could go in 50 basis points increments in not just this month's meeting, but the next few meetings as well to try and contain inflation. So far, policymakers have been sort of cautious about how many times they will raise interest rates, but we are going to get the quarterly economic projections on Wednesday, as well as a press conference by Governor Macklem. So if they signal a steeper rate path ahead, the loonie could enjoy a bit of a boost.
Moving to Europe now, the European Central Bank is not expected to announce any changes to its policy on Thursday. But the ongoing war in Ukraine is weighing on the euro, and we also have the French presidential election coming up. Depending on who wins, what reaction can we expect to see in the euro?
So the ECB meeting will be quite interesting because even though they're not anticipated to announce any changes, policymakers are facing a real dilemma right now because inflation in the Eurozone has risen well above their 2% target. And if they raise interest rates, they could push the economy into recession. So they've got a careful balancing act to perform. So the ECB hasn't given us, even though we had that announcement last meeting, they didn't give us an exact date on when they will terminate their QE program. And they might not do that just yet. So as to keep their options open in case the inflation does begin to subside soon. So they're not probably going to commit to a specific timeline for raising rates either. But we could get some hints that it will most likely be in the summer as opposed to, say, later in the year in the autumn. And if they do that, that would be a hawkish sign and the euro could reverse higher. It's really taken quite a battering in the past week. However, like you said, there is another risk on the horizon because this Sunday we have the first round of the French presidential election. Until recently, Macron had a clear lead in the polls, but that lead has narrowed lately, so markets are getting nervous because his main rival is Marine Le Pen, the far-right party leader, and that could pose potential problems for EU integration if she were to win. But the polls obviously show that Macron does still have some lead, so should he get the first round, his chance of winning the second round wouldn't look too great if he only won the first round with a very small lead against Le Pen. So that's why the euro, this has been an additional weight on the euro, so the outcome will be fairly significant for the euro at the start of the week.
And finally, a great deal of economic data will come out next week. Specifically, inflation numbers will be watched in China, the US, and the UK. What should we look out for there?
So there's quite a bit of data coming out. Let's start with the Chinese data. We've got inflation and trade numbers on the way. We've had some words of a slowdown lately because of the new lockdowns in Shanghai and several other cities. So any softness in the data might dent sentiment in the markets, as well as weigh on the Australian dollar, which is sensitive to Chinese data because so many of Australia's exports go to China. The Aussie could also be affected by the Australian jobs report on Thursday because the data will be watched more closely as we get closer to a possible rate hike by the RBA, which is expected in June. Now, in the United States, a 50 basis points rate hike is looking like a done deal at the May meeting because we've had so many signals by the Fed. So I'm not sure how much of a difference the inflation and retail sales numbers can make to rate hike expectations. In fact, market expectations are looking a little overdone at the moment in terms of how hawkish the Fed will be. So there's a chance that should the data disappoint slightly, dollar could suffer a bit of a profit taking given its recent strong gains. On the other hand, if we get any major developments with the war in Ukraine and new sanctions against Russia, those will be a bigger driver for the greenback. And lastly, for the UK, it's going to be pretty busy. We've got the monthly GDP, employment and inflation readings coming up. But inflation will be the most important because the other data won't yet reflect the damage from the higher energy prices. But if inflation, on the other hand, rises more than expected, forecasts are that it's going to rise to 6.7%. That would add pressure on the Bank of England to hike rates more aggressively. And the reason why the pound could jump on that is because the Bank of England has become quite a bit less hawkish lately. So should markets sense that we could see a reversal of that dovish lean, sterling could pair some of its recent gains.
Rafi, thanks so much. And thanks for joining us at xm.com for this weekly outlook.